In this lesson, we are going to go through how you can start to build out your case studies. Now, this is obviously the first step really that I think you should go through once you have got your kind of very first rough trade plan written down and you kind of have a decent idea in your head of how you think you want to trade. Now, why I think case studies are kind of your good first step is because this is kind of how you can quickly sense check that kind of what you have written down in your plan and the idea of kind of how you think you want to trade in your head, whether it it actually is even going to work, even in its very loose format. Does it actually allow you to get into trades? Okay, so this is kind of one of the main benefits of case studies. Now, one other time I think case studies can be really good, which is kind of a little bit later on, potentially in your trading journey, is kind of when you want to practice a specific element of your trading, or when you kind of want to roughly test and sense check a new idea or theory that you have in your head, and you quickly want to dive into that before you kind of go into the more hardcore forward and back testing. So the reason why case studies is good for kind of both of those, when you just kind of want to quickly sense check and kind of build some quick experience, is because, for instance, right, let's say you just want to pick up the low-hanging fruit, right? You want to look for those kind of easy trades when you're first starting out, for instance, and you want to say, right, pro trend trades, my main higher time frame is the 4-hour chart. I want to, catch in this bearish trend, right? How can I catch every single 4-hour lower high? Now, just kind of want to make this clear for this specific lesson. Really, I'm just kind of trying to show you the process of testing, not so much, I don't want to spend ages breaking down trades and doing all of our analysis, right? That's kind of, for the other lessons in the course. So as I'm going through this, I'm going to do this very, very brief, quick run and gun. But when you are doing this, really take your time, go through all of the examples, annotate everything you see, right? The devil is in the detail. Just build the story, draw on all of your swing points as you're getting up to the point in which you're trying to dive into, and literally annotate everything, right? Make little notes, everything that you see. The more you do that, the more you're going to learn, especially when you're first starting out. Now, as you get more experience with your strategy and your trade plan, you're not going to have to go into as much detail. You can just label the key things or new things that you're picking up on or studying. But when you're first starting out, you want to literally be almost, it can seem a bit ridiculous on how much detail you're going into, literally annotating almost every single bit of relevant price action and building the kind of the why and the understanding behind those price movements. But yeah, in more simple terms, essentially what you're going to be doing, so when you're first testing out your plan, is just looking kind of for those big sort of easy trades. So 4-hour is clearly bearish, right? Once we get the break of this swing low here, again, make sure you build the story properly and you have your swing lows and your swing highs marked out accurately, the way that you actually map your charts yourself. And then of course you'll just be looking at all of these 4-hour lower highs, right? Pretty nice easy swings in the market. And what you would do is you would then dive down into this specific area here, right? You can use bar replay to kind of bring price action to around here. Then you would dive into the lower time frames on the M15. Again, draw your relevant analysis on the M15 time zone, and then you would study then on your lower time frame execution how potentially you could have traded this move, right, and managed it and tried to milk it for as far as possible within kind of your current rough and loose trade plan rules. And again, then you would just follow on to the next one, right? Once you've recorded that one, you would then go, how could I have caught the next 4-hour lower high, right? Just focusing on those nice, easy pro trend moves, for instance, potentially when you're first starting out. So let's say we then wanted to dive into this move here, just going to bring price back a little bit. Right, so then again, you would draw on all of your 4-hour analysis up until that point. I'm not going to go through all of it now. Make sure you go in all of the detail. Right, look at any old demand zones that are acting as reaction points for price to then initiate that pullback, right, after we get the break of structure. But then what you're doing is you're diving down into this area here to see potentially, how could I have traded it with my current trade plan? And if I couldn't have traded it with my current trade plan, what kind of rules could I introduce, or entry models could I introduce to potentially help me trade this, right? And that's essentially why, in the trade plan module, I said you just need that kind of very loose starting point to get you going. And then when you dive into the case studies bit, this is where then you're kind of starting to slowly tighten it up, and you're studying these big, nice swings in the market and going, how can I capitalize on these? How can I manage it to get the most out of it? And then, yeah, once you've built up enough case studies and you have enough examples and you've got a bit more of a better feel for, one, how you want to trade, and two, making sure that actually it does allow you to get into these positions and actually manage them properly, then you kind of get a bit more I would say, tighter and strict rules, and you have a more of a refined trade plan. And that's when we're then ready to go into kind of the forward testing and the back testing, which obviously we'll cover in the next lessons, because that's when you're going to really kind of be concentrating more on kind of collecting your hardcore sort of stats, like really getting a good feel for your strike rate, getting a good feel for how long you typically are in trades, what is your average P&L, and therefore, what is your profit expectancy, things like that. That's for later on. But for the case studies bit, this is where you're just really using the benefit of hindsight to your advantage, and you're just looking at this move here, right, and you're going, right, how can I deconstruct this, how can I re-engineer this move, re-engineer it so I can see exactly what it has been the most perfect way to trade it. And then that's how you can kind of build a strategy, or a more refined strategy, from what you've already got written down from that point. Hopefully that makes sense. So again, going to keep driving this point home, but please don't do this in the way that I've done it, in terms of very brief analysis. Really take the time. You're looking at this lower high here to catch. Yep. But go back through the M15 and make sure you have painted the whole story of where all the swings and the swing highs and the swing lows are, just so you make sure you've got everything mapped out properly. Because, for instance, let's say we're looking at this lower high here, and I want to go, okay, was it in the premium and discount? Well, this looks like, a pretty obvious swing high to swing low. And then you would go, if I just get it drawn there, okay, price pulled back above the EQ, so it's in premium. But actually, is that 100% correct? Because let's see, again, I'm doing this pretty quickly, so I might even get this wrong, but roughly that looks like one push down. That was a swing low, so then we take the swing high, so then we switch bullish. We're bullish at that stage, so that would be the swing high, then that would be the swing low. We don't get a break enclosure above till here, or below to over here, right? So then what's the highest point that broke the low? That would be the swing high there for me, based on kind of how I map structure, right? So actually I would have got that wrong if I hadn't have painted the story properly. So I bring that back up to that high here, and now we can see actually it didn't reach the EQ. So we were selling from the discount, which it's not ideal, it's not the nicest of confidence, but this is a good example of where it can work out. And you want to be annotating this, right? Literally draw on, little note here, just you can just be as brief as just discount, or you could say selling from discount, whatever, right? I don't need to hold your hand at this point. you can make whatever notes make sense to you, but I'm more just trying to make the point of just make sure you label everything, explain everything, observe everything, and this is going to be the quickest way you are going to progress and have confidence. So yeah, and then just slowly build the analysis from there. Again, all with the benefit of hindsight, right? You're using this to your advantage to see how can you capitalize on these moves. So we clearly have that, that buy to sell candle, that pivot candle. It does obviously eventually lead to break structure. It's more of a decisional candle, but it's a bit in the middle of the run. It's not the most obvious of zones, and I necessarily would have had super high confidence compared to potentially a zone up here that I'd want to trade from. But let's build the story a little bit more. Can we increase the confidence of this zone? Or if we look across where the zone, where that bullish reaction started, right at the start of this wick, what did it react to? So we scroll across, we can see, okay, there's these buy to sell wicks here, or sell to buy, I should say. Always get that mixed up. There we go. So is that what it reacted to? Let's just double check. Yep, we can see that price came in, reacted to it, right? Demand tried to hold, and then supply took over. So not the most obvious of zones, but this is a point I tried to make through the technical analysis modules, so I'll make it again if I kind of haven't made myself clear enough, is that the way I trade in the live market, I won't necessarily notice all of these little buy to sell wicks and these reactions and all of this, and I won't draw them all on. But what I will do is if I see price coming into an area, right, we're pulling very correctively on the lower time frames, we're starting to build liquidity and we're starting to give my entry models, I'll quickly analyze this and go, does it make sense? And then I'll build a story, and I'll come back here and go, yeah, there's those buy to sell wicks. Did they react to anything? We take this whole sort of buy to sell pivot range here, we can see that there was supply. It led to the break of this low here. Price came up. This is where that first reaction started, that then led to the move. We can see that big imbalance, that overwhelming imbalance in demand and supply, where demand stepped in, pushed and smashed through up supply and took out these highs here, right? So yeah, that's a pretty decent little area there. Those buy to sell wicks is definitely a flip zone. Again, we had another flip here when then supply takes control. Okay, now this area makes sense, right? And I would annotate all of this as you're building your case studies. Okay, sweeps of liquidity, all of that stuff, and then I'll drop down to the M1 and go, okay, well, how can we have potentially traded this on the M1 on my lower time frame, my execution time frame? Are my entry models here? Again, I'm doing this very, very quickly, but you want to be studying all of this, looking were there any early moves before obviously the one that played out, because we could jump straight to that point and we can see, okay, well, we had this big corrective range here. Look at the timing as well down here. This is all the London session. So we kind of make that session high, the London session high there. So you can put on your M1 liquidity. Right, then what do we get? We get a nice aggressive break of that high into the M15 zone. Oh, look at that, that's 1 p.m. That's around kind of the New York Open, right? Just as we expect volume to kick in. So get an aggressive run of the highs. Then we get that V-shape move back down, right? That aggressive in and out, showing large orders are being filled, supply starting to step in. Then what do we have? Very, very quickly, whether you take the whole range like this or whether you just take that last pivot candle, right? Just do it on how your current plan is. We have demand there. Price then obviously reacts. We get that reaction that we want to see. And then this is where you would have your flip zone. So whether you draw it on the pivot like that, or if you take the whole range, right? Because this is where that first initial reaction occurred up until that point. I personally would probably draw it like that. And now you can see that zone coming into play, right? So you've got your flip, your chock, pull back into the zone. And then this is where you can analyze, okay, what happens if I enter on the distal and I put my stop right behind the zone? Well, with a 2-pip stop, actually you take a loss here. So how big of a stop would you have needed to stay in this trade? 2.5 pips, probably would have got taken out and spread there. You wanted a little bit more of a buffer. 3 pips definitely would have been the safest there to get you in if you entered on the distal. Okay, what if I entered on the EQ? Well, with the EQ, yes, then I could have got away with a 2-pip stop, right? Because in the end, what happened? Price built these, you see these two little wicks here, M1 equals, they got swept. Price then mitigated the remaining orders left within this wick here before then eventually price went. Okay, so these are all observations you want to make, because, you know, if you notice over as you build more and more case studies that actually sometimes your zones do get wicked, then actually you need to figure out how much of a pip buffer you need on average, right, to stay in enough trades. Just make sure that this is appearing in the hours and minutes. Yeah, so then this is when you can then start to look at your management. Okay, you know, obviously again, make sure you have really taken the time to draw on all your observations. Another thing you may want to do as well is actually observe, you know, was there potentially an entry model that's set up earlier that potentially was a loss because price may have come in beforehand, right, given your sweep liquidity, your interaction, your flip, chock, right, pull back into there, but then actually maybe it was a loss, it pulled deep into the zone before then you got the winning move play out. So just take an observation of that as well, because potentially you might observe something, right, eventually that you see actually the first time price comes into my zone, especially when I'm selling in the discount, that actually that first setup on average tends to be a loser. So that's when you can then potentially bring in a rule that you know, you're going to wait for an M15 chock if you're going to sell on a discount, or maybe you're going to wait for, you know, a deeper push into the zone and price to mitigate the EQ or something like that, right? I'm more just trying to make the point here that the more examples you collect, the more data, the more patterns you're going to see, and then you can start to really refine your plan, right, down into more and more rules, strict rules, and then that's when we can progress into the next stages of forward and back testing. Okay, so yeah, at this point you'd ideally have quite a few annotations, however your trade plan is set up, and then you can start to look at how you can you know, milk the most out of this move and how you could really trade this. So for instance, you would put on, okay, at 4-1, let's say you partial 20%, you would put a little line here or a little annotation chart saying you know, what management decisions you made at each point. Then maybe you target the M15 low for, you know, a decent amount of your volume for 16R, and then you can, you know, drop up to the 4-hour chart, and again then just, you know, go how far did this trade actually move, you know, look for areas where you would expect pullbacks, right, from areas of demand here, right, price is pulling back, and you can, you know, yeah, just the more detail you drop into, the better. So that's kind of the process of obviously how you go through and analyze you know your strategy from kind of that real kind of hindsight benefit of just going, well, you know, this is a real nice clear 4-hour lower high, let's see how we could have caught that continuation, and just, yeah, analyze through each time from there. Obviously I've only just shown the 4-hour, the M15 and the M1. Your higher time frame, your medium time frame, and your lower time frame, those are what you need as an absolute minimum, but I would definitely advise you looking at the daily at least, and even the weekly as well, building the story on here. Okay, so we can see we had that sweep of the high, we started to retrace to the downside, potentially this was a weak low because it's failed to take out the swing high, and that's why when you're catching 4-hour lower highs in here, maybe you don't want to manage early and you actually want to try and trade all the way down towards this daily low and potentially even further, right, things like that. So once you've done all of your analysis, now it's time to actually kind of record that case study, and this is where you will have your Notion case study section. So basically on your dashboard, right, where you have case studies here, if you click into there, and this is not pre-populated, just this page will be available in the notes below the specific video, so you will be able to duplicate, it should say duplicate up around here, and you can duplicate this to your own dashboards and chuck it in here. So I've already pre-populated one for you. If you want to ever populate a new table that's completely fresh for when you're coming back at a later date or whatever, just click this and it will generate a new one for you and a completely fresh table, and you can just chuck it in below. So essentially all this is a very basic spreadsheet. It's kind of a basic spreadsheet capability that is built within Notion. So very simply, all you do is you start filling it out, right? So obviously this is a euro-dollar trade, so you can click in here and click one of these pairs. Now to change this, all you do is either, if there's a pair here that you don't have, for instance, let's say you wanted to trade Kiwi dollar, right? You can just put in Kiwi dollar and it will create a new one there for you. And then you can go in, you can rename these, you can change the color, yada, yada, yada. That's essentially how you play around with that. Now setups here, this may be, you might not be at this stage just yet, so don't worry if you're not, but this is where you can have different entry models, right? If you want to have your plan kind of separated out that way, but maybe you have a model that includes a liquidity zone, maybe ones that don't, and you want to separate those out, then you can have this here. Or maybe you want to not focus so much on the lower time frame entry models, but you may want to separate out, the higher time frame. So you may want to call all of these trades that we're looking at now, 4-hour continuations, higher time frame continuations, right, for instance, or M15 continuations or something like that. And you may want to have a column like that. Or maybe you want to have two columns, and you want to have one that says, your 4-hour continuations, and then you want to have another column that just has for your specific lower time frame entry models, right? That's obviously going to be a bit more detailed, but I'll leave that there for you to kind of play around with that. Let's just say you bagged to the 15-minute low and you took a 16R on this trade. Now any columns that have this little E sign, so you can see all of these here as well have that. These essentially are just columns that have formulas in them, so they will automatically populate for you as you fill in information. So any column that has that little sort of E sign, I forget what the true math symbol is called. I forget what it is. I didn't study maths, but yeah, any of those columns that have that, don't put anything in there, it will do it for you here. So obviously we took a short, and then you can put in the date. So drop back down to the M1, for instance. Let's just say you took this 17th of September at 1:12. So you would go back to your Notion, and then you can go in here, right, 17th of September, and then you can include the time. So 13:12, and then I'm just going to make up the close time for the interest of saving time on this video, right? Definitely, yeah, let's just say there, and then let's just say, I don't know, 2 o'clock or whatever. And then this will all populate for you, right? The hours that the trade lasted, kind of the day you entered, the month, the year, blah, 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 the session that you entered in, that will pre-populate for you. And then the minimum stop loss size column here. I think this is pretty useful. And actually that trade we just went through is a good example of where you can then record, what was the minimum stop loss size that you would have needed in order to stay in the trade. So the more examples you can collect, you will then get an average of this column, right? And it will show you that on average with your kind of style and your strategy, maybe you need a 3 or 4 or 2 pip or whatever stop loss size. As long as you have that on average, you will stay in most trades, right? And that can be a reasonably simple way of kind of figuring that out, and with some data to back up that decision, right? Obviously that will depend on whether you're always entering on the distal or the EQ. And again, I haven't put that in there, but that may be another column that you want to collect data on, right? How the different results depending on what part of the zone you enter on. So let's just say in this case 3 pips would have kept you in if you entered on the distal. And then here, so there's some confluences. Again, you can add more or edit or change these. This is kind of just give you a very rough starting point, and you can say, right, well, we mitigated, let me just add one actually. So we didn't mitigate a 4-hour zone, but we did get a medium time frame mitigation, right? We got the M15 mitigation, so just going to add that one in. So I would click that, right? We hit an M15 zone. We didn't actually refine the POI in this case, right? So I didn't actually look on the M15 zone to see if it hit an M1 or maybe even an M5 zone within that. Maybe it did, but I didn't do it in this case. Did it hit the premium? Obviously, we're looking for shorts, right? So confluence is that it was in the premium of the hard time frame and the medium time frame. No, it wasn't. Was there a liquidity sweep? Let's say if there was, right? And let's say there was inducement. Then you got your chalk and your flip. There was a V shape, right? There's kind of some of your confluences there. So you add more or less, right? Whatever you have in your trade plan, you might want to put that in there. Another idea you might want to do here, I haven't done it just because I wanted to keep this very simple and more of a rough template for everyone to take. But again, anything I give you guys, modify it into what works for you. And kind of the idea here is you may want to separate this column into 2 columns, one being your minimum criteria and then one being a confluence column. So for instance, your trade plan, you may have your minimum criteria being that it needs to, have a higher time frame or a medium time frame mitigation. It needs to have a liquidity sweep. It needs to, have the chock and the flip. But maybe premium and discount and V-shape and whatever else and inducement, maybe that they're only confluences for you. So then you would put that in another column, right? If that makes sense. Now trends, this is just where you would say, right, the daily was bearish, the 4 hours bearish, and the M15 was bearish in this case, right? So you can see actually when you're trading in line with all 3 time frames, maybe your results are a lot better, or maybe you need, again, hopefully it's pretty obvious of why you'd want to record this. Maybe you only want to do the 4 hour and the M15, you don't want to bother with the daily, that's fine as well. Just change it to make, to work for you, and then you can just chuck in some key lessons there. But kind of what I think the most important part of building case studies is this bit here. So on each trade, what you'll do in the first column is you will open this up as an individual page. You can go into basically any trade you see in the future, open this page up, right? So index this however way you want. Potentially if you're trading more than one pair, you may want to write like euro dollar, trade one, or index it, whatever makes most sense to you. And then down here, right, you can either have it completely blank, or just get rid of that. If you click here, this case studies template, this will pre-populate a template for you. Now, I'm going to pre-populate in a second, but if you do ever want to edit it, then go in here, and of course you can go and edit that template, or create your own version if you want. But if you just click that, it will then quickly populate this for you. And then what it will do is essentially that's your high time frame, there's your M15, right, your medium time frame, your lower time frame, your trade management, and your lessons. So what I would do is go in here and write up all the confluence. Literally, it doesn't have to be paragraphs and paragraphs. It can just be a few keywords like, pro 4 hour trend. Just I'm not going to do it all now, but just do whatever you like to do, the level of detail you like to do, all the key points for each time frame, and then you want to chuck in a screenshot. So for instance, with the M1, right, I would zoom right in on the actual entry. Okay, let's say you're happy with that. Obviously, this would have all of your annotations on, and you can press Alt and S to take your screenshot. Wait a few seconds, and you'll see it pop up to confirm that you've got that copy to the clipboard. Or you can come up here and click Screenshot there. Now, there's a couple ways you can kind of put this into Notion. Either you just paste that in there, and then you can either leave it as a link like that, obviously, which you can then click and open and access later, or you can click embed like this. Now, this used to work really well, and it used to save as an image, but now it kind of does this annoying sort of crappy thing that I don't really like. So the way that I personally do this now is I go into whatever internet browser you are using, and then just paste it into here like that, and then you essentially have the image here, and now you can copy that image, go back into here. I'm just going to delete this for a second, and then I would paste this into here like this, and now you have the image there, just so whenever you open this up you can just quickly scroll through and open it, and then obviously you can open that full screen, etc, etc. Now what I also like to do actually is I'll just go back, oops, no, not go back, I want to copy that link and put the URL in here just so I have that as well to get access to. And that's essentially how we do it, right? Have your link there, have your write-up with a few key points, do your medium time frame, lower time frame. Obviously that should have gone in the lower time frame there, not the higher time frame, but you guys get the drill. Look at your trade management as well, write in any key notes, how could you have managed it better? And then just kind of your overall key lessons there. And that's it really. And then the more case studies you build, the more you'll have these out. So it's kind of a nice balance between having some quantitative data, nothing too heavy, but just a few odd things here that you think is relevant that you want to have, which you can quickly see at a glance, and then you can dive in and actually open up the trade, and then you can actually study the screenshots and kind of the more qualitative side of things, right, as you're writing up any observations you have made. So really take your time. It should take quite a while per case study you should do. Like you really should be spending a good amount of time on it, really writing it up, really studying it, seeing where potentially you may have yes, we've seen when we came over to here, right, this actually worked out, but a lot of times you may see there may be some early signals. How could you potentially have avoided taking some losses and things like that, and really take the time to study it. Don't rush. And the only thing I guess I would add about this table as well is you can go into properties, if I can find it, where is it, there we are. Right, and then you can, if you kind of want to hide some of these properties, you can hide them as well and play around with that. Obviously, if you want to add any new ones, there you can do that as well. Another thing is filtering. So this is useful when you have quite a lot of case studies. You can then go into here and you can go, maybe I only want to look at. So you can just add a filter, right, and go, I only want to look at. Where's pair, right? There we go. You only want to look at your euro dollar trades because maybe you trade multiple pairs, and then this would filter it and it'll obviously only show you euro dollar pairs. And you can get a bit more advanced with it as well and do groups, and you can do, you know, if then and yeah, do as much as you want. But it can be very useful when you kind of want to dive into specific trade examples where maybe you were trading counter trend or things like that, and go in and look at all of those trades, and you'll have them all there. So the functionality, yes, it's nowhere near as good as Excel, but at this point, at this stage, I think Notion's quite good for this, because I really like the functionality that you can open it up as a page and have all of this in here. It becomes very, very useful at a later date when you can kind of click through these and scan the images at a reasonably quick glance. So yeah, that's kind of the process I would follow. Again, you know, mold this into what works for you. This is kind of just to trying to give you a rough idea and example of how I would personally kind of go about doing it. I would say at a bare minimum, you want to be trying to collect 20 case studies on each pair that you trade with your kind of current plan, and then use all of those to kind of then refine your plan a little bit more, okay? So at a bare minimum, do 20. That might sound like a lot, but you know, if you do 2 a day, two an evening, or even 1 an evening, right, it's going to take you just over a week or just under a month, right, if you do 1 an evening. But you know, what's a month? And if you're going to do this, take this seriously, professionally, do this for the rest of your career, that month's going to go by like that regardless, right? But if you spent the time to really write these up and really study it, you're continuing to build that solid foundation. And then when you jump into the kind of more complex side of testing, it's going to be a hell of a lot easier because you've done the work now, with the benefit of hindsight of studying these kind of really nice trades and setups to see, you know, how your plan works out and to get your plan to that solid stage first. So yeah, I think that wraps up everything I kind of wanted to make. As always, if you have any questions, feel free to post them below this video or hit me up in the community. And like I said, if you make any kind of better versions of this, you know, ones that kind of suit your strategy a little bit better, or if you have any better ideas, then as always, chuck them in the community too, and share them with everyone else. And then you can kind of build up, you know, if you come back at a later date, you know, maybe in your trading where your plan's quite different, you can then go in and start a whole new case study table. Or maybe you just want to focus on, or you want to split them up, the tables between different pairs, or maybe you want to focus on one specific aspect of your trading where you really want to focus on kind of those longer term management trades. You can come in right here and do that. And potentially as well, you might want to make another page in here just to collate all of your key lessons that you've learned in one place. This can be another good area. So I'll leave that there. Hopefully you guys took some value from that. Yeah, and enjoy.
You